Huh. All right. All right. I think we're working. All right, cool. Well, back with another weekly review. So, like always, I'm gonna start by looking at the macro time frames. So, those of you if you don't know what macro is, that just basically means we're looking at the larger time frames. We have uh, the weekly, the daily, and even the monthly sometimes. So the monthly is usually the strongest indicator, just because that's our biggest time frame. But you can see here, if you look at the monthly time frame on the future side, it doesn't really tell you much. You just kind of see that we've been going up. So we kind of have to drop into these lower time frames. Really, the daily is going to show us the most right now. But kind of like I was saying last week, I was kind of am keeping that same mindset that they're going to keep pushing the markets up and that we're going to be bullish in our biases. And again, we had a new rallies, new highs on both the NASDAQ and the S&P. So we're going to continue with that bias this week and assume that both NASDAQ and the S&P are both going to keep pushing higher. So yeah, so I mean, you can't really do much right now on these higher time frames because we don't really know what liquidity is reaching for. We're just assuming they're going to keep pushing it higher. So I'm going to go out. If we go on the hourly time frame, still same thing. We keep pushing higher, but you start to see more. You see some order blocks on here, and you see we ran up here. Like I did in last video, we're going to look at the 15-minute. Because this is important, because this is the weekly open. Oh, this is also cool. You guys haven't seen this yet. So here is a gap in price between the Friday close and the Sunday open. So we closed, the market closed at 4:45 Friday, March 1st, and then we opened up today, March 3rd, 6 o'clock, and there was a gap in price action here. So this would be called the weekly opening gap. It's not a significant gap. Sometimes you see these huge, but they're still really good to mark on your chart, just to have down, because price usually wants to come back and fill this up. You can see we kind of wicked down into it, but we didn't quite fill it all the way, so we could see price reach down in here. So I'm just going to mark this too, just because this is always good to look at. Alright. So we're going to just push this over. Alright. And then also, like in last week's stream, we're going to take the open of the 15-minute candle of the week, and we're going to mark this out because the weekly opens usually have a lot of significance on price action. So drop a horizontal right here. And weekly open 3-3-2024. Alright. And now you can see on the NASDAQ we have this open, and we see we have a gap here below it. So we'll see how price reacts in the coming week. And I don't have it out yet, but what I also do every week is you can kind of see from the prior week, I kind of cut out each day with these vertical lines just so you can see price action each day. So here's Monday's price action, Tuesdays, Wednesdays, Thursdays, and then Friday, and then now we have into Sunday. So I can show you guys kind of how I just drop these. Kind of just bring you guys through my rhythm every Sunday night. This is what I'm doing. Uh, if any of you are getting into trading and you don't have a charting platform you use, TradingView is great. This is what I use to chart everything. You can paper trade through it. It costs like $4 a month, I think, to get CME futures. So it allows you to like live paper trade. It gives you live data of the market. It's free to an extent. So like if you just want one chart, like you won't be able to get all the chart setups with a free membership, but you'll still be able to chart at least one chart and could follow along with me if you're trying to do anything like that. So yeah, tradingview.com. I love charting on it. I've always been what I used. I used Thinkorswim for a little bit, but I just feel like the hotkeys on TradingView are a lot better. Yes, I'm just going to drop each one of these until eventually we get to the close Friday. Which is going to be right here. And now you can kind of see here, here's Sunday, Monday, Tuesday, Wednesday, Thursday, Friday, and then we go into the next week. So, and also, like, look at this. So, talking about how price action reacts to these weekly opens. We look at how well the bodies of these candles respected this weekly open. So this was 211 too. Keep that in mind. This wasn't like last week's open or before that. This was like 3 weeks ago. This is his open, and look how well price respected that. We came down, dropped, touch it. Yes, there's also an order block over here, which is great, but we literally touch this line and take off from it. So that's why I said I feel like it's really important to mark these levels on your chart, just because they really do have a big influence on price action. So I just kind of do that. I usually leave them on there for at least like 5 weeks out. I feel like after that they usually become insignificant, especially if price moves really far away. But you can see this is a great example right there. So again, like I said, view on NASDAQ, we're going to stay bullish, keep the bullish bias until we see otherwise. I could see us coming down and filling this gap. That's not really far. I'm not going to say that we're going to come down, but in my opinion, maybe we could come down here, see something, but in no means is that trade advice. Again, here's my micro time frame. So intraday time frame. This is what I'm trading in. I'm actually entering positions on. I'll show you guys a position I took on the euro dollar Friday because the elite trading challenge started. But yeah, so you can see this gap here. So these gaps go across every time frame. It's a universal thing, but the higher time frames are respected more than the smaller time frames, so it's important to mark those and see it. But really just gotta wait till morning, see what the New York Open gives us. And look at S&P, kind of see the similar things. I think it's also important to note that we saw that 211 2024 weekly open. We saw NASDAQ react to that really sharply, but then you see the S&P's open, it's a different story. We didn't even get down to it. So also, like, we can use these intermarket relations to help gain data, but they also aren't going to move the exact same. So that's why it's important to kind of look at both, or if you're just focusing on one, only use what that market's telling you. Don't let the other one influence it. And you might also see I have these, I have every high and low of the day marked out with these blue lines, and that's because intraday in the week, like within these 5 days, price has a tendency to run these because this is usually where liquidity is built up. So price action seeks liquidity. You can see here we made this low. Next day, we opened midnight Thursday, came down, took this liquidity, shot up, took liquidity here, and then eventually in the week we reached up here. And at the very end of the week, we reached back all the way to what was here. So these are also good levels to have, just good targets for liquidity pools, so you can have a better estimate of where you believe price action may be headed. So yeah, we're going to drop the weekly open on the S&P. I think it's already, you can see this. See how, and you don't want to just pay attention to the wicks, but you can see the bodies here of these candles. So for those of you who don't know, if you're new to trading in general, you have these things on my chart are called candles, and you have bodies and you have wicks. So the wicks are the lowest price that was offered and the highest price that was offered. And the bottom and top of the wicks are the open and closes. So at whatever time frame was, so let's say this, we'll look at the 6 o'clock open. So at 6 o'clock on Sunday, price opened at 5,142. And then since price closed at 5,144.25, since it closed above the opening price, it's going to print a green candle because it was a bullish candle. Price went up in this 15-minute time frame, but in this 15-minute time frame, there was a low of 55,141.50, and there was a high of 5,146.0, and that's what wicks are. And there's a saying that wicks do the damage, the candle bodies actually tell the truth. So don't trust what the wicks are really showing you. A lot of that's trying to take out buy stops and take out the intraday traders. You really want to trust the candles of the body. So you can see the candles right here at like 9, about like an hour ago, closed down and filled this gap. So I would say this gap on E-mini isn't as important to me just because it's already been filled. So we could push through it, we could push back up it, but right now it's not really giving much significance because it's already been balanced. But again, we're going to run the same thing we did, drop our horizontal ray. Drop that there, and then lock it in place. Now we have that open, and then again, same thing I'm going to do on here. I do with all the other charts. Drop the vertical line. And if you wonder where I drop these lines exactly, it's midnight of each night. So Monday midnight, Tuesday midnight, Wednesday midnight. And that's because it's also important to look at the midnight opening price. So are we above the midnight price during the New York session? Are we below it? Because a lot of times that can give us a lot of influence on where we might want to be as a trader if we want to be long or short. And I'll make a video. It's called Power 3. ICT teaches it, and it kind of just shows that there's usually a Judah swing before the actual swing of the market, the bigger swing that's going to be made that day. So the market makers usually push the market lower before they send it higher, and vice versa. Yeah, I'm going to start after Thursday this week. I'm going to start making informational videos too for any new students or new people watching my channel, and just teach them kind of like the basics of trading if you don't really know anything. That way, if you are keeping up my videos and you don't understand exactly what's going on, because some of the terminology and some of the charts, hopefully that will pick you up to speed. So yeah, we can see the same thing here. So I had this weekly order block here on the S&P, where I could see if price falls below the fib, there's a 0.5, so this would be the halfway point of this downward candle, which is a bullish order block. If the weekly candle closed below this, I probably change my bias. That is where I would start to look and say, all right, maybe they aren't trying to push the market higher more. Maybe we're going to consolidate. Or I wouldn't keep that same bias. I'd have to see what candles are printed here after that. But again, until we come down to this level, until then, I'm just still going to expect it. We're just going to keep pushing it up. But yeah, it's really hard when the markets are at these all-time highs to get a clear narrative on where we believe higher price is going. So with that, I am in the Forex market now. A lot cleaner price action, in my opinion, going on there right now. But yeah, so same thing, just kind of waiting for New York, see what happens, see if we keep pushing up or not. This is the same thing. This is my micro time frame for the S&P, and you might notice I have the Nasdaq and the S&P on my intraday setups, and that's because I'm looking for a thing called smart money concept convergence. So basically, if the two markets, since these markets are usually supposed to move in tandem, if one of them makes a higher high and the other one fails to make a higher high, we can use those signs that the markets are telling us to help us get a higher narrative on what's doing, or like know if we're on the right side of the market. Because if you see, let's say we see S&P make a higher high, but Nasdaq fails to make that higher high, and we already took liquidity on the S&P, but Nasdaq's showing a really heavy sign to sell because we didn't make that high, then you know that we're probably looking like we're gonna be bearish on the day, just because both markets weren't able to make that move. So we usually want to see them, if one breaks a low, the other's going to break the low, high, and high. And if not, we just want to mark those times. But yeah, so that's kind of what I have for the futures indices that I look at. We'll hop over into my Forex now. So Forex, I have all charted up. So this is my weekly chart. This is just kind of, this is all the way back to 2008 to where we are current day. And this is kind of how I break the market down into different sectors on where we having these range runs. So you can see we have a bearish run, bullish run, bearish run, bullish run. It goes in these cycles of when we're, okay, you can see consolidation here, then we had a bearish run and that. And there's certain things that we see on the smaller time frames that you also see on these larger time frames that have the same thing going on. So right now you can kind of see that on the higher time frame, the euro dollar is kind of in this little consolidation area. But before we got into here, we had this really big bearish run. So we kind of had this bullish range open up, kind of came into consolidation. So there's no clear narrative, but these blue lines are all targets where I have the euro dollar possibly running. Obviously, the closer it gets to the 1, the more likely it's going to get there. And obviously, the less potential like opposite signals going towards it is also going to make the 1 more favorable. So like obviously we have like a bullish order block here, which you can see we hit off of and kind of came up. So it's kind of looking like we're going to keep pushing up and take out this liquidity up here at some point at that 1.08878 level. So looking at that, so kind of I'm still kind of keeping a middle stance on the high time frame. But so Friday my trading challenge started with Leap, and I'm trading the 2022 ICT model, and it actually set me up really nice because we had this nice relative equal lows right here would be considered sell side liquidity, either relative equal highs or relative equal lows. So relative equal lows are sell side liquidity, and relative equal highs would be buy side liquidity. So we can use higher time frames like this, the highs equal highs, to help us with our narrative on where we assume price action is moving. So I saw these equal highs Friday morning, and I was looking to get in my setup. I needed a higher time frame liquidity pool to target, and I was targeting here. And it was strange because it really, you can see how equal these lows are. All of these candles are lined up right here. So we built up more sell side. We didn't really take it. The trade ended up working out well because I put my take profit with the bodies of the candles and not the wicks. If I put it at these wicks, definitely would have been in trouble because the market had a huge reversal. I'll show you that then on the smaller time frame. Kind of have the same thing here. I'm gonna chart the open quick for the Forex and put the date blocks down. All right. And if you're just starting out trading too and starting to get into paper trading, just trying to read these markets and look at them, I recommend only looking at one market. I'm looking at three now, but really heavily looking at euro dollar more than the futures indices just because of their higher time frame like bullishness right now. But if you're definitely just getting started out, I definitely would just be looking at one market. Don't try and be reading more than one because it's already difficult enough to try and just figure out one when you're first starting. So I just pick one you like, you want to read, you want to research, and I just stick with that one. Let's drop the weekly open. Get a little closer. Alright, cool. Alright, so I'll show you guys my trade too. I made a TikTok and short about it, but I'll show you guys here as well. So, the main trade was seen on the 15-minute time frame. See here. So, you can see where I got short. So yeah, this ended up being a short position. We had a 15-minute imbalance. Again, I'm going to make a playlist of lessons about these different time frame charting things I look at, these different indicators on what I look at in my setups. So basically part of that 2022 ICT model is you're looking for a fair value gap with an order block, and with that we see a shift in market structure. So all of that became present here. I saw that this morning, the Friday morning, right around 9. My spread, so at Forex you have a spread, you don't get entered. So ideally I was trying to get entered at where this black line is, but I ended up getting entered down here. So the trade took a little more drawdown at a point than I wanted, but it still never hit our stop loss, so we managed to hit our take profit, which you can see down here was this red line. This is where I had sell side liquidity, but you can see it wicked and then shot right back up. So that's why you really want to respect the bodies of these candles. You don't want to respect the wicks just because they're not always telling you the truth. So yeah, you can see this trade worked out well. It was 2-to-1 risk reward. So with the challenge, it was the max share size you can put on euro dollars 55,000 shares. And I put on 50,000, so it ended up being a nice move. I got account history. I made $68 on the position, but 22 of that was taken out from commissions. So, but overall, I'm happy to have started green in the challenge. You know, that definitely didn't have to be that way, but the trade worked out well. Definitely wasn't my best trade, definitely wasn't the worst, but it was a good ICT model. It was pleasant, and I feel like it's cool to see that even on a day that the majority of the range was really bullish, we still made money when it was bearish, which kind of shows you can trade in any market if you know exactly what you're looking for and you have a specific trading plan. So to wrap up this session, we're gonna hop over into Google and let's check out the news we got. So this is the economic calendar I use. So forexfactory.com, completely free. I'm not sponsored, affiliated, or anything, just the one I choose to look at. So you go over here to calendar, and again, it gives you all the dates. So when you're just trading futures indices like the S&P and the NASDAQ, like U.S. markets, you really can just pay more attention to the U.S., like the USD events. But once you start trading like Forex, now since I have euro dollar, euro news is just as manipulative to the market as U.S. dollar news is. So you kind of have to look at both. So you can see tomorrow, nothing crazy for nothing really for the U.S. Euro, we have these lighter events, but again, the only things I really look at are the orange and the red, because those are ones of the actual events that will actually affect the market and put volume into the market and can affect your trades. You should just be aware of. But yeah, nothing crazy. I think it's cool to note too is you see a lot of the European stuff coming out is really early in the mornings. Like usually like 2 to 5 in the morning is like the London session open. So compared to the New York's open from 7 to 10, and obviously that's from the different time zones. So if you wake up and you are trading Eurodollar, it's important to look at how the London session moved and how it was traded. So yeah, you can see Tuesday we have ISM service for US. I think it might be non-farm payroll this week. Unemployment claims. Yeah, non-farm payroll. So this is a really important week to be aware of because this is a lot of inflation data that comes out. You can see you got lots of heavy hitters here. The markets do not move how they usually do during this week because of this inflation news coming out. There's a lot of fear in the market. It doesn't have to act how it usually does. There'll be like random spikes, might consolidate. So usually the beginning of this week you're pretty good to trade. I'll take trades on Monday, Tuesday, Wednesday. Thursday, Friday, I would never take a trade normally, but with the challenge I'm in, you have to take a trade every day. So we're going to look in, try and read this price action as best as we can, and just try and get like a tiny scalp, nothing crazy. Basically just try and cover the cost of entering the trade, get a little profit just so we can stay in the challenge. But really not trying to grab a big range or anything on these days just because the non-farm payroll week is just a really manipulative week for the market. So yeah, then I'm going to end it off there. Thank you guys for joining. I hope you could find this stream insightful, and I'll see you in the next video.